Let's address what separates JASMY from the hundreds of projects promising utility that never materializes. JasmyCoin isn't waiting for someday adoption. They're shipping products right now, and each one adds genuine demand for the token. First, the JASMY Chain testnet went live recently. This isn't just a rebrand or a marketing stunt. JASMY becomes the native gas token for a blockchain that's EVM-compatible, meaning developers can port Ethereum applications directly onto this infrastructure. That's massive, because it removes the friction that kills most new chains. Developers don't need to learn new languages or rebuild from scratch. They can migrate existing projects and immediately tap into JASMY's ecosystem. The scalability angle matters too. Layer 2 solutions are dominating the roadmap conversations across crypto because Ethereum can't handle mainstream volume without outrageous fees. JASMY positioning itself as a Layer 2 alternative means it's competing in the space where actual adoption happens. Not speculative trading, but real applications processing real transactions. Here's where it gets interesting for token holders. When developers build on JASMY Chain, they need JASMY tokens to pay for gas. When users interact with those applications, they need JASMY tokens to execute transactions. That creates organic buy pressure that doesn't depend on hype cycles or influencer pumps. It's structural demand based on utility. The node expansion adds another layer. JASMY will be usable to purchase junction decentralized network nodes. Think about what that means strategically. Every node operator needs to lock up JASMY to participate in securing the network. That's supply leaving circulation. And as more nodes come online, decentralization increases, which strengthens the security narrative that institutional investors care about. But the most surprising development is My Resume, launching in the fourth quarter of 2025. This is a recruitment platform connecting staffing agencies with job seekers, powered entirely by JASMY's infrastructure. It sounds mundane compared to DeFi protocols or NFT marketplaces, but here's why it matters. Recruitment is a trillion-dollar global industry. If JASMY captures even a fraction of Japan's staffing market, a country that already shows regulatory openness to blockchain, the transaction volume could dwarf what speculative traders generate. This is the shift that separates legitimate projects from vaporware. JASMY isn't chasing the next hot narrative. They're building boring, functional infrastructure that solves real problems. And when you combine that with partnerships spanning digital gift certificates and Japanese government collaborations, you're looking at a project that's threading the needle between crypto innovation and mainstream adoption. Before we get into the chart analysis that's predicted every JASMY move since April, hit that like button right now if this breakdown is making sense. And if you're not subscribed to TJ Crypto World, what are you waiting for? We cover the projects building real utility while everyone else chases meme coins. Subscribe and turn on notifications so you don't miss the follow-up when we analyze whether JASMY actually hits these price targets. Now let's talk about what the chart is screaming at anyone paying attention. Since April, JasmyCoin has been trading inside a textbook wedge pattern. And this isn't some vague trend line you can draw 15 different ways. This is a clean structure with clearly defined boundaries that have been tested multiple times. The upper line of the wedge acts as resistance. Every time JASMY price touches that level, sellers step in and push it back down. The lower line acts as support. Every time price hits that level, buyers step in and push it back up. And here's the critical part, we just bounced off the bottom support again. If you go back and look at the previous bounces from this support level, each one produced gains between 30 and 40% as price climbed back toward the top of the wedge. That's not speculation. That's documented price action over 6 months. The pattern has been remarkably consistent. Touch support, bounce upward, hit resistance, reverse downward, repeat. Right now, JASMY is in the early phase of another bounce. If the pattern holds, and there's no technical reason to think it won't, we're looking at potential upside toward the upper resistance line. That would translate to gains in that same 30 to 40% range from current levels. But here's where it gets more interesting. Wedge patterns don't last forever. Eventually, price breaks out in one direction or the other. Given that JASMY has been consolidating while building actual utility, the probability of an upward breakout increases with each test. If that breakout happens, the target range shifts dramatically. A confirmed break above the wedge resistance could send JASMY toward 2 cents, which represents fresh multi-week highs. If momentum really catches fire, especially with Layer 2 applications launching and node adoption growing, 3 cents becomes the next psychological barrier. That would be roughly doubling from current prices and marking a significant shift in market structure. October historically leans bullish for crypto. We've seen it enough times to recognize the pattern. Institutional money returns after summer vacations. Fourth quarter FOMO starts building. And projects that spent the summer building rather than marketing tend to catch bids. JASMY fits that profile perfectly. The risk, of course, is that the wedge breaks downward instead. If support at the lower trend line fails, there's not much holding price up until the next major support zone. That's the nature of trading consolidation patterns. You get clarity eventually, but the direction isn't guaranteed until the break happens. What gives me confidence in the upward scenario isn't just the chart. It's the fundamental developments timing perfectly with technical setup. When fundamentals and technicals align, breakouts tend to be stronger and more sustainable. So, what are the indicators telling us? Let's get granular with the technical indicators because they're painting a picture that supports the bullish case more than the bearish one. The RSI is sitting near 46 right now. That's neutral territory. Not overbought, not oversold. What that tells you is JASMY has plenty of room to move higher without running into immediate resistance from profit taking. When RSI is in this zone, it means the market hasn't picked a direction yet, which creates opportunity for positioning before the move happens. The MACD setup is more interesting. The signal line is crossing closely with the histogram just turning positive. For those who don't live in indicator land, that's a shift from bearish momentum into early bullish momentum. If those green bars continue building in the histogram, it confirms that buyers are starting to overpower sellers. That's your early warning signal that a larger move is developing. Open interest relative to market cap is around 0.03. That's low. Really low. What it means is, there isn't excessive speculation in derivatives markets. Traders aren't over-leveraged on massive short or long positions. That's actually bullish, because it means there's no bomb waiting to explode. When open interest is low, price movements tend to be more organic and less prone to liquidation cascades that wipe out both sides. Put these indicators together, and you get a picture of a market that's preparing for upward movement rather than collapse. It's not screaming buy now with overbought readings and euphoric sentiment. It's quietly showing accumulation, momentum, shifting positive, and room to run. That's the setup you want. Not when everyone's already in and taking profits, but when the smart money is positioning before the crowd notices. If this analysis is helping you understand what's happening with JasmyCoin, do me a favor. Hit that like button if you haven't already. Share this video with someone asking about altcoins for October. And subscribe to TJ Crypto World so you're first to know when JASMY breaks out of this wedge, or if it breaks down and we need to reassess. We don't sugarcoat reality here. We follow the data wherever it leads. So where does that leave you with JasmyCoin? The chart is showing a pattern that's been reliable for 6 months. The fundamentals are showing real utility launching in real time. The indicators are showing early bullish momentum without being overbought. And October historically favors crypto assets that spent the summer building. Does that guarantee JASMY pumps 40%? Of course not. Markets don't work that way. But it does mean the risk-reward setup is tilted in favor of upside rather than downside right now. You're buying near support with defined risk if wrong, and substantial upside if right. The bigger question is whether JASMY breaks out of this wedge entirely. If it does, we're not talking about 40% moves within a pattern. We're talking about a shift in market structure that could carry this token to 2 cents and beyond. That's when utility meets technical breakout meets bullish market conditions. Whether you take that trade depends on your strategy and risk tolerance. But ignoring a setup this clean because it's not the loudest coin on Twitter would be a mistake. Sometimes the best opportunities are the ones nobody's screaming about yet. Thanks for watching TJ Crypto World. If you want to see how we're tracking other altcoins positioning for October, check out our video on hidden gems under $100 million market cap. It's linked on your screen right now. I'll see you in the next one. Stay sharp, stay informed, and never let the market make decisions for you.